Welcome back. Well, AI has been the story of 2025, driving massive gains in the stock market. Record deals have happened and an unprecedented data center build-out. But Congress's concerns are emerging over the past month about a possible bubble forming within the stocks. Joining me now is ARK Invest CEO Cathie Wood. Cathie, it's great to see you. Welcome.
Thank you, Maria. Happy to see you.
And, of course, you've been all about growth and investing in AI. Your flagship funds are up better than 40% this year, outpacing the broader market. And you've pushed back on calls that there is a bubble. How do you see things?
Well, I was in the bubble in the late 90s, and this is nothing like that. The late 90s, no one had a care in the world. When Amazon said, we are going to lose more money because we're investing aggressively to capture the internet age, the stock would go up. That's not happening today. There's a wall of worry out there. And I think AI hype is a big part of the wall of worry. We believe that we right now, if we were to think about this in terms of internet time, we are in the equivalent of 1995, but we are progressing at twice the speed as the internet age. So in 26, it'll be the equivalent of 97. So those were very good years in terms of the internet trade.
Yeah, but I mean, there's so much money having moved into these data centers. I asked both Jensen Huang about it. I asked Jamie Dimon about it. And everyone are saying, yes, it's coming. We're going to see the return. Here's what Jensen Huang told me when I asked him about the trillions of dollars moving into AI data centers, Cathie. I'm going to get your take.
I hope for NVIDIA to be able to go back and compete in market in China. In the last 4 years, the administration really set us on a path that really backfired. The policies have really backfired. From a 95% market share in the China market, which is one of the most important markets in the world, when President Trump left office, NVIDIA's market share in China is now 0%. I hope we're able to revert back to the policies of the Trump 45 administration and get back into the market and compete.
And, of course, Cathie, this was specifically about NVIDIA wanting to sell chips to China. You know the news of the morning that President Trump is greenlighting him selling the H200 chips to China. What is your reaction to that?
Well, my reaction is we learned from DeepSeek what is going on in China from a technology point of view. DeepSeek showed us that China is progressing and actually on the open source software front probably is #1 now. And why is that? It is because our software companies stopped selling into China because they were afraid of IP theft. So China went the open source route, which I love open source software. So I think that this is the right decision to allow NVIDIA chips back into China.
Do you worry about the national security implications of China's, People's Liberation Army using those chips for the military?
Well, I agree that is a risk, and I am sure that our government is going to be all over that risk. We'll see how they're able to control it. All technology can be used for nefarious purposes.
Yeah, that's true.
But that's why we have, national security, defense, and so forth.
Cathie, let me get your take on your own portfolio and how you see the world in going into the new year. You've made some notable shifts in the mega cap tech exposure. Just in the last week, you cut about $15.8 million worth of Meta shares after adding to the position late last month. You're also cutting back on Tesla, your #1 holding, which still you're adding to NVIDIA and Google in the last few weeks. What's driving these trades, and what can you tell us about how you're positioned going into the new year?
Sure. Well, what's interesting about all of those is they are AI related, of course. The fear that we're in a hype phase that is going to end badly, I think is premature. I think, as I said, we're more like 1995. And if you look at the capital spending indicators, the macro ones, there were 5 very solid years of capital spending contributing to real GDP in the United States. We are at just, we think, the beginning of that in the last couple of years. So that's one thing. Meta's return on invested capital is probably going to go down as its margins compress because it is investing so aggressively to make its way and be very relevant in the AI age. Tesla is at the top of a range, so we take profits, allocate into other stocks that may have had some indigestion. That's simply a tactical move. For all we know, Tesla's been in a 5-year range, and as I've always said, the longer the base, the bigger the breakout. So we could break out here, but we've been in this range for a while. So taking a little off the top and waiting to see if there is some volatility is a normal course of action for us.
And you've said that the genome space is also interesting, and I want to get your take there as well. Are you looking at biotech? How is your portfolio positioned in terms of sectors, whether it be growth and the AI trade versus others like healthcare and biotech?
Well, AI is permeating every sector, every industry, and actually blurring the lines between and among sectors. Autonomous mobility, so Tesla, largest AI project on Earth. Many people don't think of it that way, but that is what it is, starting with robotaxis and then humanoid robots. The most profound application of AI, we believe, is going to be healthcare. And companies like Tempus AI, and that's in our flagship ARKK and in our multiomics portfolio, which has struggled the most of all of our portfolios over the last 4 years, because healthcare and technology converging is very confusing to healthcare analysts who really don't like technology, move fast, break things. And to technology analysts, they don't like regulation and politics and all of that. So we think it's very inefficiently priced. And that Tempus AI, CRISPR therapeutics, gene editing, curing disease, Intellia, Beam therapeutics, they are going to benefit from the convergence among sequencing technologies, AI, and gene editing.
Yeah, all great points all around. And I guess when you look at the pricing part of the story, you believe that the cost to develop a drug could fall by 4 times with AI. Is that the big impact from AI, or is it like robotics? We've been talking about robotics in terms of saving lives. How specifically will you see the big impact from AI on healthcare?
Yes, 3 major ways. One, as you say, the cost of research, discovery, and development is going to collapse from roughly $2.4 billion for one drug down to $600 million, we think, in the next 5 to 10 years. We also think that diagnostics is going to transform. So being able to diagnose disease through blood tests, including cancer, in stage 1 or even before stage 1. After all, polyps shed into the blood as well as tumors. So with AI and sequencing technologies getting as good as they have become, we think that's possible. The third is curing disease. So I mentioned CRISPR gene editing, other gene therapies. We think that healthcare is going to transform. Well, we think we're going to move from a period of sick care, which is where we spend 80% of our dollars at least, into a period of preventative care and health care. So it's going to transform healthcare completely, we think.
Yeah, I'm sure that's the case. I want to get your take on gold and Bitcoin as well, because gold is doing so well this year, up 60%, nearly 60% for the year. Bitcoin has been a lot more choppy. It's down just 20% in the last 3 months. You've mentioned this trade could actually flip-flop next year, with gold facing downside risk and Bitcoin poised to outperform. Tell us about that.
Yes, so Bitcoin is behaving more like a risk-on asset. It has played the risk-off role at different times during the European sovereign debt crisis, during our regional bank crisis. But right now, it's risk-on. It is climbing another wall of worry, and that is the 4-year cycle. We think the 4-year cycle is going to be disrupted, and what I mean by that is Bitcoin regularly dropped 75 to 90% in its early days. The volatility is going down. It's down about 30 some odd percent. And I think there's a fear of the 4-year cycle. We think that the move by institutions into this new asset class is going to prevent much more of a decline. We may have seen the low a couple of weeks ago. Now, gold is more of a risk-off asset, and that its rise, we think, is proof that we are climbing a wall of worry. Investors are using gold as a hedge against geopolitical risk. And yet, if you look at what happened from the early 80s to the late 90s, gold went down as we were in the golden age for innovation, ending with the internet. We think the same could happen now, and that Bitcoin will remain a risk-on and re-engage, and this fear of AI hype will, I think it's good. As an investor, I'm happy that people are worried, but I think we will continue to lean into that because we've really just begun the AI age.
And you're poised to increase holdings and exposure to your Bitcoin ETF, right?
Yeah. Oh, well, Bitcoin ETF is ARKB is passive. So the more that investors want to participate in this new asset class through ARKB and other spot Bitcoin ETFs, the better for us, and actually the better for investors longer run, we believe. All
right. So it sounds like you are bullish going into the new year, Kathy, and you want to be increasing exposure to AI, even though you did cut some exposure to some of those names like Meta just recently because of valuation issues.
Yes, more return on invested capital issues. I'll say one more thing about next year. I really believe that we're moving in from a rolling recession where we've been for the last 3 years. Manufacturing's been negative for 3 years in the United States, into a rolling recovery, which I think we're entering now, and then a productivity-driven boom, the likes of which we have never seen before.
Wow. Yeah. I mean, Nancy Lazar also have been talking about this productivity boom.
Yes.
And of course, you've got to believe AI is a big part of that. Kathy, it's great to catch up. Thanks so much for joining us.
Thank you, Maria.
Good to see you. Kathy Wood joining us from ARK Invest. We'll be right back. Stay with us.